Hey guys, welcome back. Just a quick follow-up video to kind of piggyback on the prior video. Um, just right off the bat, I'm neither bullish nor bearish on this market. I just analyze what's in front of me. I'm slightly bearish on the economy, obviously for multiple reasons that we all know about. I'm also a little bit bearish when I see the amount of retail investors and speculative trading and a lot of the movements I see in some of these stocks that are going up 10 and 15 fold. It's almost turning into a giant casino where a lot of these front runners are finding these low float stocks, and lately Chinese have been the theme. Before it was small cap biotech, and it's going to change as we go along. And then before that it was COVID, equipment, or anybody even mentioned they might have a possible cure. So we get it. The market's always going to have that speculative aspect to it, but I've never seen the level of speculation like I've seen, which is not a good sign for a longer term market. But just to kind of follow up on what you're talking about, how does this sell-off look when we look at the Heikin Ashi candles compared to prior pullbacks to kind of see, is this just another pullback and then a move higher? Well, obviously we have the island reversal on the top, which you're not going to see on the Heikin Ashi because they're structured different. But we should see, if this is going to be a continuation move, you would see increasing volume, and we don't have that just yet. So from the initial sell-off of complacency here, we had these very similar candles, correct? We had multiple candles to the downside, big red body, short wick. Those are usually pullback candles, big red body, short tail, big red body, short tail. So the Heikin Ashi is extrapolating information from the prior candle before it generates a new candle. It's a little bit more delayed, but it's more definitive in direction. You can see clearly that if we change this to regular candles, you would not see clean green like that. Sorry about that. Clean green and then red, and then clean green then red. You would see a very choppy, different looking chart, and we've shown it before. You can see just your regular candle chart is completely different. We can use candle or candle trend, and you're going to have a mix in there, right? Some green, and then red, then green, then red, and then a red one in between the green, a red in between the green. So the Heikin Ashi is one that I use for a cleaner look and a more definitive, informative trend for me to kind of dictate which way we're going. So when we look at this pullback here, obviously it's a lower high and then a slightly lower low. The problem is for the bears, and we're going to know more on Monday, that the second day was on less volume, whereas on prior sell-offs in here you have increasing volumes on the pullbacks, right? Very indicative of a continuation panic sell. Same thing again, you get a bounce, right? And then you have another increased selling in volume. Then as you start to get towards the bottom where we're starting to reverse, you have some indecision in volume, kind of a burnout on this candle here where you really come down hard, and then it kind of slows a little bit and you get a little bit of a pop, and then it's not as definitive as these, obviously, right? So although these were two of the largest candle volume selling that we've seen since the downturn, and definitely the highest selling we've seen since the upturn in the market, they just came from higher levels and more speculative area and a higher level of complacency and the put to call ratio. Multiple reasons, right? The problem is if you don't start to see this volume increase, and we can do the math. So let's just say SPY had 208 million shares, and we can get that more definitively, and then we can do the math by dividing the amount of hours in trading. And if we notice within the first hour or whatever, we have a down move and the volume is extremely high and ratio, we know that we're in for a doozy of a day, possibly a retest of the low, and then maybe breaking down incrementally into that 296 area. So we'll look at the volume. Just looking at the RSI, we also looked at that. It looks a little bit incrementally weaker, some divergence. We do have a slight crossover on the short-term MACD. But once again, everybody, what's the old saying? The truth usually lies somewhere in the middle. People are like, oh, we're going to go all-time highs on S&P, and then everybody else is like, oh, we're going to crash. Sometimes it's just somewhere in the middle, Sometimes we pull back and we go sideways until the market's trying to figure out, are we going to get a cure? Is there going to be a vaccine? And that's another thing. If you guys are trading TVIX on volatility, at least, if you're in at 160, let's say we're trading, let's just say Monday we open up and TVIX is at 190. have a stop in there if you're trading and looking for a move to like 205. Put a wide stop in down to 170 because God forbid you're long volatility and some news comes out during the day, you're going to get smashed. I mean, it could literally drop 100 points if they say we have a definitive vaccine. You certainly don't want to be caught in that. So use a wide stop just for protection. And then just in closing here, looking at the McClellan oscillator, we can see that in the prior sell-offs, let's look at the first sell-off here, right? This is definitely the first pop and then pullback. We got to the neutral zone. Second one we ground up. I think we had 8 trading days higher. And then we pulled back to the neutral zone again. Third leg, we got to the neutral zone. As we got higher, obviously, the bigger sell-offs because you're at a higher level from a starting point. This one got us down to the red zone, and then we bounced back up and then through the upper red channel on the bounce. And then this one obviously brought us back down to the red zone again, not as low as this one. So this is going to be an important thing for us to watch. If we do have an up move on Monday, where does it take us on the averages on the S&P 500 on the McClellan oscillator? Does it bounce back up into the middle of the top of the zone, or do we pull back down with weakness and break lower than here? That would be an extreme red flag too if we were to break that level on the McClellan oscillator. Even though we didn't break much lower on here, it would be a concern that the broader averages were showing some hidden weakness that is not showing up in the S&P 500 due to the S&P 500 being highly weighted in stocks like Amazon and Microsoft. So there's going to be some more information for us out on Monday. If I was to guess, and I'm not the kind of guy that says, oh, we could go up or we could go down. My opinion is we'll probably open up slightly weak on Monday. That's just my opinion. But we'll collect the data as it comes in, and we'll see how it goes. The guys that are in TVIX here, you'll probably have another chance of getting out. Not really sure yet, but we'll know more information. We certainly don't want people to sell into weakness and then have the market, just have a little bit of a rebound and then we've legged down again. Just like in here, you might have 3 days up and then wham, the bottom, they pull the rug out. So you could have a couple of days up where we back test the 312 area or even higher, and then wham, down to the downside again. And you're like, oh, well, I shouldn't have sold. You told me to get out at 180, and I sold at 180, and now it's 260 or whatever. We have to kind of play it, play the strength sell and then buy the weakness if you're looking for. But you have to correlate that to movements in the S&P 500, to channels in the S&P 500. Don't just blindly buy it and hold it and say the market's going to crash. That's my main point. That works at the lower levels when we were buying at 108 and 111 on TVIX and then selling the rips because we had that long level of complacency. We had this long level of complacency. That's the time to buy TVIX. Now the knowns are there, right? Now everybody's talking about, oh shit, the market's good. So TVIX is front running the movements, right? A lot of times when it gets ahead of the futures, TVIX is structured that they'll actually buy or sell TVIX within the holdings to more mimically and correlate to the move of the volatility index. So those are things you have to understand as well. There's a weird dynamic to how this thing moves. So let's be aware of that, and let's see what Monday brings. But my guess would be we open up slightly weak on Monday morning, but we shall see.